session, Fireside Chat, titled Two Tracks, One Mission, Reaching the Bottom of the Pyramid. India now has a multitude of formal financial institutions, amongst others, to help advance the financial inclusion in this country. Each institutional type, besides statutory obligations to reach out to unbanked segments of the population, design their own strategies with appropriate products, easy processes, and great commitment. Ladies and gentlemen, I have the privilege in requesting the anchor of this conversation, Mr. Tamul Bandopadhyay, Consulting Editor, Business Standard, and the two very special CEOs, Ms. Jayashree Vyas, Managing Director, Seva Bank, and Mr. Uday Kumar, Managing Director and CEO, Credit Access Grameen, to kindly join us on stage. And let's give them all a huge round of applause. As you can see, we have now separated the hall, and we've now got one wonderful hall in front of us with a lot of energy and drive. And we're moving on to the last session before the awards ceremony a little later. The fireside chat, anchored by Tamul, will delve deeper into differing strategies adopted by two institutional types, a MFI and an urban cooperative bank, to understand how different institutions perceive lending to the BOP section of the population. Over to you, Mr. Bandopadhyay.
Thank you. Good afternoon and a very warm welcome. Hall is nearly empty. I think everybody is chasing their tea at this point of time. But let's start. It's 10 past 4. We'll cut the time because we're running late, so we'll end at 4:45. Two tracks, one mission, and the mission is reaching out to the bottom of the pyramid, or financial inclusion. We couldn't have a better pair than this. Uday Kumar, he runs Microfinance NBFC, a listed entity, and Jayashree Ben from Seva. It's almost 50-year-old. I think Seva as an organization 50, but the bank itself is 48. Enormous experience. I'll speak the list. We'll just try to make it as interesting as possible to check the ground realities. Just some pointers. It's a very interesting time. It's this financial year, Reserve Bank of India changed the rules of the game. After 2010, RBI again changed the rules for microfinance. It's now activity based, not entity based anymore. So there is a level playing field between banks and microfinance. That's point number one. Point number two is Reserve Bank of India has freed the interest rates, but I can't think of anyone who has cut down the interest rates. It's actually gone up. So for the bottom of the pyramid, the good story is not yet started. Point number three is, of course, the technology, digitization. India is making rapid strides, and particularly after COVID, we have seen what's happening. And there again, you will find a sort of two trends. You ask any microfinance entity, most of them will say that 100% disbursement is through digitization. But when it comes to collection, 10%, 20%, 25%, that's what the digitization comes. That thing. And fourth, it's a very crude reality is this: investors are not excited about microfinance anymore. And I'm raising this because, Uday Kumar, you are a listed entity. And you will find that the entities which were into microfinance in a big way, like the small finance banks and all, they're withdrawing because, sometimes it's a Assam crisis, which is a region specific, and sometimes it's a global issue like COVID. But ultimately, your balance sheet affected, which is why we find that many of them are withdrawing from the microfinance, and investors are not excited about it at all. So this is the backdrop. We have Jayashree Ben will hear you about Seva and the cooperatives, how they get into this inclusion space. And Uday Sab, from you, will hear from a microfinance, NBFC microfinance perspective. So first, preliminary remarks, and no gender bias, but You
Yeah.
first.
So good afternoon. So it is almost as you said, it's four, no, 5 decades of banking. This is what we had done. But at that time, it was only basically because all these women workers in the informal sector did not have access to formal money, formal credit, and then they were borrowing from money lenders. And that was the reason why this bank was started. But we did not have any blueprint to follow. So what we were doing was that we thought that whatever these women want, for example, giving them first credit, that they can pay back to money lenders. Second was that they had already pledged or some other assets, and we thought that we should bring that up. So basically whatever women wanted, we were giving. This is what basically we were doing.
That's a, yeah, this is a preliminary remarks. We'll get into
Yeah.
the issues, the ground
Thank you, sir.
realities.
Thank you.
Hmm.
I think it's a long journey what microfinance had in this country. It started with non-profit organizations, in the 90s, and then moved into formal organizations just to ensure that sufficient liquidity, sufficient investments are flowing in so that it can be scaled. I think it has done its job very well. From 2005 to 7, lot of institutions moved into NBFC categories. Then, of course, we had faced the crisis of Andhra in 2010. There, RBI took the position of regulator, and then which really created a real platform for MFS to grow with efficiency, and then the investment flown in, the what you call atmosphere was well created for growth of microfinance. If you see the bureau in place, regulation in place, flow of credit in place, SRO is in place, so which also the regulatory support, as you said, SFBs, and 9 or 10 of them become SFBs, one became universal bank. I think we had a very golden run in the last 1 decade in microfinance, and then Grameen, of course, we also grew along with the industry, and we are today probably one of the largest MFI, and spread around 14 states, and having 40 lakh women borrowers with 16,500 crores portfolio, and then listed, as you said, our responsibility has gone up. And after this, but maybe looking at the growth of the industry, looking at the maturity of the industry, probably regulator made the change the guidelines to ensure the removed some of the regulation which is bit stringent, one of the interest rate cap or the loan cap or the number of lenders cap, which have been removed to made the entire business entity based. No, it's a more of a asset based, not the entity based, so that it has a common regulation for everybody. I think this is a blessings of the regulator to for this maturity what that industry shown in the last 1 decade. I think this will be the next probably MFI.3 now, microfinance.3 now, running now. I think there's a good highway, and there's a large opportunity and lot of things to be done to reach the underserved in this country. As per our estimation, it is about another 10 crore of households yet to get into formal financing. Probably microfinance all together, including all entities, will be able to do with this new harmonized guidelines. So I'll stop here right now.
Yeah, just tell us, you start, and then Madam Jasivan will say that. In fact, since morning I've been sitting here. Now people are talking about this. When you talk about inclusion, it needs to be beyond credit. There are so many other things, you know,
Correct.
like for instance, gold. Loan against gold is something India discovered now. Earlier, there was only one or two south-based entities. Now everybody. State Bank of India's loan against gold book is it crossed 1 lakh crore
Correct.
in December.
Yes.
Maybe Jesse, when you come later, first Uday Kumar, so tell us, as an NBFC, I mean, to what extent you are into
Yeah.
beyond credit? What else do you give?
Correct. Sir, actually, we have been one of the early adopter of what you call need-based finance, or it
Mm,
can life cycle needs finance.
mm,
We always viewed client as a create a limit to them so that they can draw based on their need, like whether it is for business purposes, for home improvements, for kids' education, or for sanitation, or water connection, or for even medical expenses. All these purposes, borrower can borrow the loan. That's one of the loan actually. Other than that, we also provide the insurance, provide the hospital cash benefits. Also, we started even cash withdrawal from the bank. Like mini ATM. Our loan officer is like ATM. He actually in the center meeting when they meet the customer every week, customer can draw the money. So it's very interesting story behind it actually. When we checked with our customer, they spend almost half a day to withdraw the money from their bank. They have to go to bank along with their spouse, because bank is 3 to 5 kilometer or 20 kilometers away for the bank or ATM. They spend almost half a day. Anybody we ask, they says half a day it will go. Then so why not we provide that service? No cost, no time wasted for them. They can draw money in the center meeting. Every week we meet them. So there's a 4 time opportunity in a month for them to draw the money. So all our customers know they are not going to ATM or bank. They are drawing from our loan officer. So this is one of the things. Similarly, we are also trying to provide the bill payments opportunity for them. Their water bill or electricity bill they can pay through our center meetings. So many of the smaller things they can do. Even two-wheeler insurance they can do. Insurance premium they can pay. So they can do many of these activities in our center meetings. So this makes more of their what you call their basic needs are taken care. So that's why we can do much beyond the loans in the center meeting, which are already providing.
But savings you can't offer, right? As an NBFC, you can't offer savings.
We can't offer savings, but we can always partner with the insurance company or the bank. We can provide that, which is one of our next agenda to work on providing savings also.
Yes, Ruben?
Yeah, we always thought that we if we want to understand women, their lives and their their whatever their kind of life cycle needs, and that for that reason what we were doing was that we were going to our women members, not only going to them, but we were staying there for 2 days, 3 days, and trying to understand that what is their what do they want. And one of the things we realized was that they were very much they were liked, of course, gold, but they were not much of that. But whatever they whenever we were saying, they were saying this is our crisis, that whenever there is a crisis we would use gold for us. And that was the first thing, and we did this kind of a product also. But apart from that, we did lots of other products, like as of course, so savings they could do, so savings. But savings also they were withdrawing every time. So savings, insurance, and pension, all these things we had designed over a period of time. I'm not saying only, but also we saw that even if we had designed these products, they were only using credit. This was something, and they were also borrowing from money lenders. So that was the thing which we did not want to. So then we started understanding their financial behavior. And what we saw was that in that behavior, the first thing was that aaj kamaya aaj khaya. They would not save money, and even if they saved very little. So the second thing was that whenever they had needed some money, then they would go to money lenders again and they would borrow. So it was then again they were getting into debt. And the third thing was that in spite of we telling them lots of products, they were not using those products. So then we realized that there is a need for some kind of a financial literacy. And that is how we started. First was that they did not have any planning. So the first thing we started to tell them is that how you plan. I mean, in a small things, and of course we are making films and other things. Second thing was also that we then, of course, all the concepts, like power of compounding, and that really helped so much, because then they know that yes, this money is growing. And it was only in recurring account, so different type of products also in recurring account. And now what we're saying, for a festival 1 year, then it's also short term, medium term, and long term. And the third thing was also that they also have to do like credit. Yes, they can have it, but if it is for productive purpose, then saving, yes, that is for them, for consumption. And insurance, of course, insurance is for risk. So all the three, they understood it. We get all the kind of concept to them also. Many films we have made it. And now, at least I would say 50% of women are doing this. I'm not saying 100% are doing it, but 50% women are doing it and understanding it.
Um, Just have tell us, tell me. I remember, I think one of the investors meeting. I met you in probably Hong Kong or Singapore somewhere overseas, and you said you don't want to become a bank because yes, banks have the access to deposits, but there is so much of capex. You need to build so many branches. You need to have so many people. Then you have the regulatory requirement, SLR, CRR. It's not worth becoming a bank. I can. Still, even today, you hold the same thing. I mean, liability is not an issue with you at all.
Yeah, I think I still hold the same view.
Hmm.
But it doesn't mean that bank is not good business. Bank is a good business. Bank is a good business with the time and volume. Time and volume, it's a good business actually. But whereas in this current NBFC regiment, we have all the equipments available to reach the bottom of the pyramid, reach the rural, because this business runs in rural. So today you give the example of SFBs not doing or not moving out from MFI. Probably the reason that that the expense is prohibitive for them to do it. So therefore, they may be diverting their business to the other form of assets. Whereas there is large opportunity in India. We have more than 10 million households yet to get formal finance. As a microfinance, we have all the ability to go to deep rural and operate in the low cost operation. So whereas as a bank, probably my customers of 40 lakh customers knows us for credit. If I want a deposit, they are not my customers. They won't give. Then I have to reach to other customers who are maybe part of ICICI, HDFC, SBI. Then I have to create my brand from zero. Then you have to build infrastructure, you have to build technology, you have to build the manpower. My employee cannot sell liability. Again, you have to build the. So then top of that SLR, CRR, which means it takes long more years to build the real bank. So therefore, we have opportunity to run the current regime and then achieve what we want to achieve easily without being a bank. And then we can bring the product to our customers. So therefore, I still hold the same position of don't want to become the bank.
Just even for you, liquidity is not an issue because they are the people, they have turned savers and they are keeping their
So
money and
just
they're using
sorry,
that.
I just
Yes,
didn't answer
yes.
the liquid. One second,
Huh?
didn't answer the liquidity. I didn't
Sorry?
answer the liquidity part actually.
Huh.
So
Ajay,
liquidity
sorry.
also
Huh.
we are
Huh.
able to we should raise liquidity very well. For
Huh.
example, we should not look the liquidity alone actually.
Hmm.
Cost of borrowing plus cost of operation need to be checked to give the real return. So now for to become a bank, you have two options, two problems. One is cost of deposits or a cost of liability and cost of operation together, it will be much more than our cost of operations and cost of liability. Therefore, still it is a better bet to remain microfinance.
So you never have any problem with liquidity?
No, never.
Okay. Yeah, just even. So your CUA model is very different. You are not reaching out to banks for money. It's their money and they're using, right?
Yes, it's a
But
cooperative banking.
but
So,
going beyond, how do you see? Is it sustainable, this model?
so far it has been sustainable,
About the
but we
scaling,
need
I'm
to,
just saying
yes,
scaling up.
yes, no, yes, we are scaling up also, but like in terms of numbers of branches and in different other places also. But we do have to grow more and more. This is what we are also seeing it, and we are trying it more. And yeah, we are not growing as fast as anybody else.
So what would be your size? 6 lakh number of
6 lakh women, number
6
of
lakh
women.
women. Yeah,
Yes,
yeah.
yeah.
So what would be the growth year wise?
Year-wise, almost like 50,000 women are coming in.
New women
Yeah.
are coming.
Yes.
So how are you? Meaning, is there any strategy to grow more, or how are you?
One is our own members
Hmm.
are also, their relationship. So first thing is that, they have always been bringing other women. The second thing is also we have all those women who are going in the field every day. So that we are also seeing that, they have it. Then there are 10 people who are sitting there and they are also earning this. The third thing is that our financial literacy program, we are doing continuously this, and they are understanding and learning it, and they also bring, not only they come, they bring their daughter also, or daughter-in-laws also. So that is how it is going on. So,
Tell us, you're talking about the financial literacy, but going beyond now, the digital literacy also you are looking at.
Yes, yes,
What is the, how is it? Can you
yes,
take us
digital
through?
literacy also we have done, and you have got we have got UPI also.
Hmm.
So, and of course, majority of them were not very literate. But what we saw was that, first thing was that they were learning, because when we were doing it, with them. The second thing what they saw also, that there were three things. One thing was that they are all manual, all work they are doing manually, and they have to walk a lot. So once they see that ATM is there, so then they feel that now we don't have to I mean, our money, our how this time is saved. Second is cost is not that much, so cost is also saved because they had to come for bus. The third thing which was very important was that they found so much of self kind of confidence, because they come here and there is a passbook s- passbooks printing is there, and they would print themselves. So that was something which they were. So what the most thing is, what was happening was, we saw was that they're very happy with this. But still it's 40%. Now 40% women are doing this, but we are also working on
All
this.
your 6 lakh women have mobile phone, right?
Not smartphones, mobile phones, yes.
Yeah,
But
Android.
yes,
So what in percentage terms, so how many will be smartphones?
it must be, I would say 60%, not more than.
60% having smartphones.
Yes.
And
No,
your
no. Say 60%.
Android phones. So
Yes.
40% smartphones.
Yes.
But are they using the
phones.
smartphones for the financial purpose? I mean,
Yes, yes, definitely. And many of them have become entrepreneurs also, no, small entrepreneurs. So they are also using some applications and other things also. QR is they are very happy with the QR.
tell us about you.
Actually,
How are you adopting digitization?
yeah, digitization is a journey, definitely. It started and it's going on. As you asked the same question to her about the smartphone penetration. Actually, about 60% of the customers' family has smartphone, not necessarily customer has smartphone. Maybe 25% of them might have used for some transactions, not much, but lesser. But from a point of transaction, 3 years back, about 10,000 customers used to pay digitally. Today, 3 lakh customers pay digitally. To that extent, it's a growth, but it is not, from percentage side, it's still low. But it's increasing. It's increasing
3
in
lakh
urban,
customers of how many lakhs here, your total customer?
out of 40 lakhs customers.
40 lakhs customers. So
About 10% or so.
less than 10%.
They pay. In fact, monthly almost 25 crores of collections happens to digital, but it is less comparatively. But the numbers are going up faster. Adoption is faster, but there are some challenges in rural, particularly the ecosystem or infrastructure, the smartphone, digital literacy. So all these are the challenge for them, and their own business is cash-based business. That's another. For they have to go and deposit money in the bank to pay money to us, so it's non-cash. So that itself is a time taking for them. So therefore, uh, cashless is lower. But from a microfinance point of view, this is unsecured business. So you need to reach to collect the money on the time and venue and the date fixed to collect the money, and on-time collection efficiency is the benchmark for your efficient business operation. Else, your delinquencies will go up, and your recovery chances will be less. Therefore, this is always a high-touch and high-tech business. You need to be in. You need to reach them to collect the money, and you need to increase the what you call technology to make the processes faster, transaction faster, and then the accounting faster, the reaching the data faster. So that helps you to make that high tech. It is always, it will remain, at least for the medium term, high tech and high touch business. So touching is important in these unsecured businesses.
Yeah, but tell us about this. Everybody says that in microfinance you can't be only digital. It has to be touch based, otherwise the collection efficiency will suffer. So it's digital, etc.
Correct.
But how honest is this segment? Is it a myth? Because anecdotally I hear from
Okay.
people, because on the one hand Even this morning also the sessions were saying this is one segment, you don't worry, they are not fraudsters, they are not Nirav Modi, they are not those kind of big corporate guys who take money and then flee from the country and all. They are the honest people and all. Is this correct or is it a myth? Because anecdotally I hear from people, there are some guys who take money just not to return the
I,
money.
I, I
On the
endorse
ground reality, what is that?
I endorse Shashi's view, definitely.
Endorse the.
Endorse Shashi Tumuluri, you said, right? Shashi.
Hmm.
So I endorse his views. Actually, poor won't default. So they won't default. Sometimes they get carried away by some influencers. So who perpetrators will actually misguide them to default. Basically, it is not their fault sometimes, many times. Actually, the default start as they become affluent. As they become affluent, suppliers are more, and they don't know what to do with the money. So there's a possibility of default goes up, but as they're lower in their category, the lesser of the default. That is what we observe. They normally by their own conscious, they are not defaulters. They always
Jessivan, what do
pays
you
back money.
see among your people?
I would say that it was 11th point, but we
Hmm.
also believe is that relationship. There are two things: relationship and trust,
Hmm.
and this is something on which we are working. Definitely, on all women, it's mutual. So that is one thing which we have seen. The second thing which we have seen is somehow or other, because we are so much close to these women. What we have seen is that I can give you one point, small
Please,
point,
please.
is that during COVID, there was one woman who came. She was really very poor, and she even didn't have food to eat. And she came to give us the repayments. So I asked that, why have you come, and now you don't have even food, why have you come and give it to here? She said, I have I have to eat, but bank also has to eat. So I can have to give it 50%. I have to give. So that much of, not all of maybe that like that, but majority of them are sincere, and I see that it is basically because of relationship,
Because of the.
relationship,
Yes.
good relationship.
So how do you keep relationship with 6 lakh borrowers?
Um, it's all through, we have BCs, we have our own employees who are going in fields. And we are also, not me, I'm saying all this, but other people are also going and meeting them. And we also have some meetings with us also. So they come here and we talk with them.
See, Reserve Bank of India norm, which the new norm, apart from being activity based, not entity based, there are, and allowing freeing the interest rate. It also talks about uh, unsecured. I mean, the MFI unsecured loan from 85% can come down. I'm sorry, the money loan for the productive purpose, etc., can come down. I mean, can be down from 85% to 75% of the balance sheet, so that you can give loans for other purposes as well,
Non-microfinance.
right? There, this is not applicable to you because
It's
you are
applicable to us.
applicable to us
Yeah, yeah.
also.
It
So
does.
does it change the way you your business model?
It will change actually. So
Uh,
basically, when
are you giving education loans and loan
so
for the Rupa Mai for the.
we were giving education loan for the primary education earlier. Now actually we are looking. We are already piloting home loans, piloting loan against property, piloting gold loan, piloting two-wheeler loans. Many of that probably eventually it will be a substantial value. Right now it's more of a piloting, because the space or a headroom is 25% is quite good enough so that you can invest for that. So earlier it was not a case of investing and building it because the space was so small. So I think over years many MFIs will really build non-microfinance books substantially. Definitely, there's a scope. There's a definitely good potential for that.
You are on a different track, Jasivan. You don't you are not subject to all these norms and regulations, right? So for you, anything you can give.
Yeah, 90%.
I'm just saying, from medical loans to education loans to loan
Yes,
to
all.
have a roof of
All
my over my head, everything you can give.
correct.
Yes.
So what will be the roughly the kind of, in percentage term, what will be the for the business purpose loan versus the other loans?
Sometimes it happens that if we have given, say for example, 50,000, 30,000 they might have for their business and 20 for something. That is what we have seen. But now because they are saving, then that percentage is decreasing, because then they have saving, because otherwise earlier fees for children or any kind of consumption needs, they would definitely take this. But now this is slowly it's not going down.
And just even you were talking about financial literacy and teaching them, etc. Do you keep a tab actually in this 48 years of its existence, Seva? How many lives you have been able to change and push them up in that income bracket? Is there any study that you have done?
um, no, we have
Is there
not done
anything
this.
concrete you can change that yes, we are changing the lives of people?
Um, no, that kind of survey we have not yet done, but just generally it would be 60%, 60 to 70. But
But
we
it,
will do that. And
but it never comes to your mind that we need to do a study how we are changing our lives.
we are doing individual things, but this is what we have not done yet. So
Sir, that brings me to the question of that. Is this, I mean, this financial inclusion, your track is very different from her track
Correct.
because she is in a different model and your track is a different model. I mean, this is for what? I mean, you are changing the lives of people at reaching out to the bottom of the pyramid, changing the profile of Bharat. Is that or to make money?
We are providing finance at the bottom of pyramid. I'm not sure.
At what cost? At what cost?
So it's
After
I'll
changing,
tell
after
you,
Reserve Bank of India has given you freedom for interest rate, have you raised the rate or have you
in
cut down the rate or have you
microfi-
stuck to that?
microfinance in India is the lowest price across the globe.
No, sir. Let's not, because the
Across the
inflation
globe.
is different, economy is
Correct.
different,
So
purchasing power
uh,
parity is
I'll tell you.
different. So let's not compare with
Correct.
others.
Correct.
But I'm just asking you one question, Uday sir. Have you cut your rates after Reserve Bank of
No,
India
we have
fixed the
not
rate?
cut the rate
Have
because
you raised the rates?
we have raised the rate.
Yes.
I will tell you, I want to give a clarity. It's not that RBI changed the rate that you have to cut the rate. They have not told that. They said you can price based on the risk, not based on the
I think
regulation.
Vipin sir, we should have bring some borrowers also in this kind of thing. So they also listen to
Correct.
you.
Correct.
Tell me. So
But
what's the philosophy?
see, the idea is actually, for example, 2 years of COVID, I'll give one example. Regulator were allowed us to charge only 10% over the cost of borrowing. For 2 years of COVID, entire microfinance industry would have lost 5% each, both years, without having any markup pricing. Within that 10%, they would have managed that 5% losses and also the cost of operation and the delinquencies. So what regulator probably so that this regulation is only for MFIs. For other entities which are 75% of the and 70% of the entire industry need not follow that rate. Therefore, they may align the policy among all the players. I think it's only given the level playing field.
One related question, Uday sir. I'm not getting deeper into it because we don't
Correct.
have much of time.
Yeah.
But have you started differential interest rate?
Of course,
Like
yes.
in the
Yes.
same vicinity, I
Correct.
am paying a higher rate because my risk profile is different
Of course, yes.
than somebody else.
Yes, yes, we did that. For the matter of fact, we are the lowest priced microfinance in the country today. Because despite all this price increase, we are the lowest price. Our average interest is just 20.5%, which is 10.5% over the cost of borrowing, even though regulator allowed to charge more. But we charge only that. We have priced differentially priced based on geography, high risk, low risk, medium risk. We are also priced differentially for the vintage of the customer. What we found that after the vintage of 3 to 4 years, customers' delinquency will come down.
Correct.
So we price 1% lesser than the others. So we price two types of prices.
In that
Vintages.
context, can you tell us urban versus rural? Because when we talk about bottom of the pyramid, it exists both in urban, even in cities,
No,
as well as the.
we-
So, are the urban is the risk profile of urban borrowers is higher? Are they higher risk than
Not really.
That's what the industry say.
No, not
Industry
really.
says.
Not really.
People say that
Not
it's
really.
safer to because their addresses it's very difficult to track. There is migration, etc., etc. Tomorrow, today you take money from me, and tomorrow you are not there. Where that's not the case in rural India. Is
Sir,
that
it is
correct?
anecdotal. Normally, microfinance won't give loan for a migrating person. Normally, they would look at the residency there, 2 years, 3 years, then only they will go there, give the money. Normally, microfinance won't give like that. They will look at residential status. And
So
give
you
the money.
don't see any difference between urban and rural?
Not really. But we are actually away from urban. We always work in rural. Very little operations in urban actually, because there are enough suppliers in urban. But rural is our main. But we are not seeing too much variation there.
Yes, Stephen, we have 2 minutes, 1 minute each. What are the biggest challenges? Because in 48 years, one issue is this: you have not been able to grow. Like he is 1/4 of your age, this particular entity, but he is 10 times the size of yours in terms of growth. So, how do you? I mean, what are the challenges to grow and to reach out to more households?
We do need more and more people who can help us in this. Particularly, we want to bring some more and more more on people who will help us in terms of. I mean, I'm saying is they are coming as our employees, but we would like to have this kind of people so that we can we can grow more and more. So this is what we are doing, and of course giving lots of training to our own staff also, which is very important also. So that also we are finding. And now BOM karke RBI has said that uh, some kind of consultants you should bring in, and we have brought them. They are here only. So we are also taking them some kind of things from them also. So we want to learn more. That is basically.
Uday sir, last word is your. What is the biggest challenge?
I would like to answer your one of the question in that 1 minute. You said that there
Just
is no,
1 minute
there is
only
no
you have.
interest, but I would like to differ against that, because recently Fusion concluded the IPO with great success. So there is investor interest.
Okay.
We have opened a public NCD. It oversubscribed in the first day itself. So which really shows there is enough investors interest in microfinance.
Sure. No, I'm asking what is the biggest challenge? For you, you are a listed entity. And you have to keep a very close eye on your ROE, and how many times the stock is traded.
Not
And at the
really.
same, this balancing act, how do you do? Doing good to the society, reaching out to the poor, getting to the poor household below poverty line, at the same time making your business profitable and keeping the investors happy. The last word.
It's always a balancing act to remain socially relevant and commercially sustainable, definitely. But in the meantime, if you want to remain relevant, right quality of business, right quality of processes, replicating continuously, working with the rural, but provide the suitable product, suitable process, suitable pricing, growth is not a challenge. There's enough opportunities there. We can continuously grow, but it's a moderate growth, not exponential growth.
Thank you, Uday Saab. Thanks, Yasi Ben. We could have gone on and on, but it's I think very candid conversation about the two tracks. One is her model, where it's very different. The people who keep the money, they get their own money in their own ways, and it's beyond credits, so many other things also. And Uday's model, which is balancing act between keeping the investors happy and at the same time reaching out to the poor household. So give them a big hand. Thank you.
Thank you. Thank you.
Thank you very much indeed for this energetic and insightful conversation. Thank you, Mr. Tomal, Jeshri Ben, and Mr. Uday Kumar.